Good afternoon. This is a brief video looking at the state of the major currency pairs. This is being recorded on Wednesday, the 31st of January at 12:44 p.m. That's GMT. We do have an FOMC announcement in the US this afternoon on interest rates, so I think it's quite an opportune time to look at the US dollar and the currencies that trade against it. So this is our long-term weekly chart of the US dollar. And I think all of this move up off the March 2008 low is a complex correction as a cycle degree wave 4, which I don't think is complete yet. I think it's got some years to go. But counting up off this wave 3 back in, the wave 3 low back in 2008, this is very, very long-term stuff. We've got an A, B, and then a 1, 2, and I think we've got a 3 either here and an A, B, C for an expanded flat for a 4. It is possible that the 3 isn't until here, and the move down we've seen since the beginning of last year is all the A wave of a much more complex 4. But in both scenarios, we're expecting to see a significant low trading-wise in the US dollar, either from where we are now or from just one small step lower before we go into a multi-month move to the upside and possibly more. So the move up will either be as this B wave, so it'll be as a retrace against this move down, or we could actually go all the way up here to at least 109 and possibly higher to complete this cycle degree wave 4. Now, if I come down and take a closer look at this move down off the high seen in December 2016, so I'm going to go to a 240-minute chart, and there is that high, and this counts clearly as an impulse. So we've got a 1, 2, then a 1, 2, 3, 4, 5 for the wave 3. And that came down to the 261.8 extension. So that's the length of the wave 1 projected off the wave, top of the wave 2 using logarithmic scale fib projections. We've got an A, B, C for a 4 back. And then we've got another 5 wave move down as a 1, 2, 3 into the 161 extension of this local last section. So the length of this one off the 2, there's the 3, there's the 4. So it's a question now of, have we got 1, 2, and is there a 3, 4, 5 in there, or is that just a 3? We're seeing a small 4 here, and we're going to drop down one more time to possibly as low as 86, 82 in the DXY before we start this longer term move to the upside. And jury's out, it could be either or. Just coming down to the hourly time scale and suggesting that the bottom's already in, we've got this very messy move to the upside. And at the moment, I'm just running retrace fibs against the second leg up here. And we've come back down and touched an 886 retrace fib and held. If we take out 88.72, then 88.44 becomes the support. And if that breaks, then we will be looking at the next fibs down on both the last subwave and the larger degree count. But where we have most confluence is at that 86, 82 level. So top and bottom of all of that is we're expecting a significant low in the dollar imminently, and then a sustained move to the upside on a multi-month basis. Now, if we look at its polar opposite, the euro dollar, and again, this is a long-term daily chart. If I go all the way back over here, we started our counts back in July 2008 at the all-time high of the euro against the dollar. And I think we're in a very large corrective move as an ABC to the downside. So it's cycle degree, which is the light blue labeling. We've got an ABC for an A wave into the 2010 low, an ABC for a B back into the peak we saw in May 2011. Then from there, I've got a 1, A, B, C, 2 at primary degree, and then a 3 at primary degree with the various subwaves identified here, down into the lows seen in January 2017. And then this move back up, which I'm counting as a primary degree wave 4. It can go a little higher, but then I'm expecting a sustained move to the downside to below parity with the US dollar in euro. Again, just coming down the timescales, this is the count up off the January 2017 low. So you've got an A, B, C for an A wave here, B back, and then a 1, 2, 3, 4, and another 1, 2, 3, 4, 5 up here. And as I say, it can have, we get very similar to the dollar, if we got a 1, 2, 3, 4, 5 in there, or is this the top of the 3 of the final subwave? We've got a small 4 and one last push higher, and not really got too much of an opinion on which, other than to say that we're expecting this sustained move down. 15-minute chart, if this is the top, then we've had a move down, which is counters of a 5-wave diagonal move down to the 1.233 low. And we're currently sitting just at the 618 retrace fib against that move down. So it's going to be interesting to see what happens this afternoon. Now, just to add some color to all of that, these are some Hurst cycle oscillators that I use. And this is the long-term weekly chart of the euro dollar. And you can see we're now coming up into an overbought area on the weekly chart. And we're expecting 13 weeks of downside to start imminently from here in the euro dollar. But this fits with our analysis here in that this can push up a little further over the grey line into the overbought territory before we see it drop. Coming down and looking at it on a daily time scale, very, very similar. Again, it can just push a little higher before we see this move to the downside. And you see here, we're expecting an A, B, C. 240-minute, and again, this is expecting a little bit more upside before we start down. So we might come up here and hit one of these higher retrace fibs, or we could even take this high out and just make another minor small high in the euro dollar. Okay, moving on and looking at cable. Same basis. So again, coming off the 2007 high, I can count 5 waves down into the 2009 low as an A wave, a sideways move over to the 2014 high as the B wave. And then I think we're in a final C wave down to the 1.0969 level, which would be where this C wave is equal in length to its relevant A wave. And the subwaves here, we have a 1, 2, 3, and then this wave 4 back, which again, it could push one level higher to 144.008 before we drop down. Just again, 60-minute chart. If this is the 4 already in, similar to the euro, we've got 5 waves down into here, and we're sitting right on the 618 retrace at the moment. Then again, the Hurst charts that we use to add some information here, you can see that we've got this vertical line here is a sell signal that we've received. It's been active for a day or so now on these Hurst charts. We're highly overbought, and we're expecting a very sustained move down as an A, B, C, multi-week move to the downside in cable that we're expecting. And again, coming down to the daily time scale, you can see we can just push a little higher, but the curve of this is gentle, so I'm not expecting much, and then down in cable. Okay, US dollar, Japanese yen. So again, off this high back in 1998 in this case, I've got an A, B, C for an A wave at cycle degree into the 2011 low. Off that, I've got another ABC up for a B wave, and that hit an exact 764 retrace fib against the whole of this move down as the A wave. So I'm now on this, bear in mind, this is a weekly timescale, expecting lower. So I've got an A, and then this move up, which it just came shy of hitting the 786 retrace fib up here. So it may not be done. This could be the A, we're getting a B, and then we push up to the 119 to 122 area in US dollar JPY. If I bring this down to a daily timescale, I think this is the top of the B wave, more likely. And we've got a 1, 2, 3, 4, 5 for the initial part of this move down. And then we're getting an A, deep B, and a move up to 115.88 and possibly as high as 117.60 to 118.75 in US dollar JPY before we resume the downside. Now, again, if I look at the Hurst charts for this pair and come over and look at the weekly, you can see we're just starting to curl up here. We've got massive divergences on the MACD. We're into oversold territory, and I'm expecting 28 weeks of upside in this pair. So we again are at a point of inflection where I think we're going to see a local significant low in this pair and then a sustained move up, which will either be as the C of 2 or possibly to quite a bit higher in that alternative B wave count. So again, to summarize, we're looking up in the DXY, down in the euro, down in cable, and up in the US dollar JPY pair at this point in time. One last currency to look at, which is interesting, is the Australian dollar. And again, I think we're in this, this is on a weekly time scale, very, very large diagonal pattern to the upside. The top of the wave one of that was all the way back in 2008. The 2 down here in November 2008. And then we've got this A, B, which held a 786 retrace. And now we should see the C up to 1.2404 area. And again, this is going to take some years to play out. But bringing it down to a daily time frame and off the low that we saw back in January 2016, I think we've got this very complex, messy diagonal pattern playing out for the initial wave one of this move up, with a target of 84.89 ultimately before we get a deeper retrace. Diagonals all count in threes, ABCs. So off the low, ABC for a 1, ABC for a 2, ABC for a 3, ABC for a 4. And I think the move up we've seen recently is an A of this 5, and that we should now be about to come down and see quite a deep move down in a B before we push back up again. Here that is on the 4-hour time scale. So here's the 4. 1, 2, 3, 4, and I think we're just coming probably one squiggle higher here to 81.58, which is the 2618 extension, and then we get the move back down. And there's the internal count for the move up off the December low. And this final part is a contracting ending diagonal, which is why it's such a terrible, messy pattern. But I do think it would look better with just one last push higher. And again, if we look at the Hurst cycle charts that we use, you can see we've got a weekly sell signal and massively overbought on the weekly time frame. And we're expecting a 5-week move to the downside before higher again in the Australian dollar. And again, on a daily time frame, it's starting to turn and expecting this sustained move to the downside. So looking lower in this pair as well, and a bit of an insight into the various modalities that we use to combine to give us the low risk, high probability trading opportunities that we seek at time price analysis.